Good afternoon, everybody, and welcome to Trending Thursday. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always love being here. See, that's why the one that I'm looking at, Joey, on Facebook is Midday Market. Here's Trending Thursday. All right. If you can hear me on YouTube, let me know. And this one says May 5th at 13:55 was live. So why do I have so many problems with Facebook? Let me know if you can hear me and let me know where you're tuning in from. Dang it, Joey. My Facebook side, what is this? Happening now? Is this one? Let's go see. This is live now. I don't have the people. I don't have the chat. Sigh. Facebook sucks for me. It makes it tough for me to find the people on Facebook. So that's Facebook, yes, Joey?
This is.
Yeah, why can't I find my Facebook on my phone? I can't. All right, this one says Trending Thursday 5 minutes ago. There it is. I found it.
Hey, look at you.
All right. Mark from on Facebook says market bottom coming, big profits ahead from Ontario. Yeah, and I think that the video for tomorrow is going to talk about that. I think that that's going to be my video for tomorrow. I've been racking my brain trying to find the video for the 6 p.m. video tomorrow, and I think that that's what it's going to be. It's going to be talking a lot about. I think we're getting ready. I think we're really getting ready. We had a little bit of a bounce last Thursday and Friday. The only problem is with it right now is that there's no really good news in the market to be pushing the market higher. If you look right here, we did get a green light. Right now we have a green light in the color guard pricing column. Primary wave is up. And I've been getting this a lot. If the market is bad, how come your software is not showing all of the red? I need you guys to understand. Let me go so I can see the home page. When you see everything that's going on in the color guard and our color guard, our traffic light into the market, all of these values are being compared to the week ago. That's why there's not a lot of red. All right. I know that question keeps coming up a lot. If the market is down, how come this is not reflecting a lot of red? These values are tracked on both the week over week and a day over day basis. The week over week, after the market has been beaten up so much, they're rising on a week over week basis, generating yellow lights. Generating yellow lights. And that's why we're in the situation where we are, where there's not a lot of red. So this is going to be an interesting video today, or a live stream. I'm going to give you 5 stocks that I'm looking at. If I had to build a portfolio right now, I'm going to give you 5 stocks to keep your eyes on. Not only that, for those of you who are subscribers to the VectorVest software, I'm going to point you into searches to find the stocks that are going up from a bottom fishing perspective. And then for those of you who are not subscribers to the software, 99 cents gets you 30 days to give you access to what stocks potentially to play if we start to get a bottom fishing. Glenn, with 2 N's, way to spell the name, correction, a road yet with lower lows in the staircase down over time yet. So interesting when we talk about where we are in regards to looking for a market bottom, our indicators on the homepage are pointing us into that direction. We look at indicators like the MTI, the buy to sell ratio. They are at levels where the market is oversold. Definitely. The market is definitely looking for a bottom, but there's another side of that. These values can stay low for a while. What I do like is that the primary wave is up. We are moving higher on a week over week basis. Even with the market overall in a downtrend, the market or our composite is moving higher on a week over week basis. The market is showing signs that it's getting ready to want to bottom. What's stopping it is a catalyst of good news. I'm going to talk a little bit about what I think a catalyst would be to move the market higher in a big way. So I still am sitting on the on track that the market is looking for a bottom. Today we have a mixed market. The Dow is only down 163 points. The NASDAQ is in the positive. Our VectorVest composite, which tracks over 9,000 stocks, is in the positive. Do you look for divergence based on depth versus price move? When I'm looking for divergences, I'm looking for divergences, yes, with price, but a lot of times it's with volume. A lot of times it's a divergence with one of our indicators like relative timing and things like that. Those will show me a bearish divergence, but maybe I'm looking for some sense of a bullish divergence where price is coming down, but one of our indicators is moving up. That would be bullish. And we'll see if we've got anything like that going on. Beware strong bear market rally. So now, and David, I'm with you. We are in, if you look at all of the major indices, they are all in bear market territory. S&P was the last one to hit there. Why? Because energy was such a big mover to the upside. It kept the S&P out of bearish territory. I think all of the major indices right now are in bearish territory. And even if we do get a bottom fishing opportunity, all I am going to say is just be careful with it, because without a catalyst, it's going to be short-lived, just like we had last week. But everything is set for the market to be very, very close to an actual bottom. But what we're looking for, folks, is a catalyst, and it's just not there yet. All right, so I'm going to go over to the web, and let's go see what's going on there. And this is where we stand, all right? Because of what's going on, Powell says the Fed will not hesitate to keep raising rates until inflation comes down. This, in my estimation, says he's taking the soft landing off the table. I think that he knows that he's got to go after inflation. This statement tells me he's going to continue hawkish. And if that's the case, any really good bottom fishing opportunity will be stymied by what he has to do with interest rates. So everybody out there is probably going to say, well, no, he can't raise interest rates and be hawkish because he's going to crash the market. I think that's already happening, and I think he's at a point where you can't continue to kick the can down the road. One, you got to just pull the Band-Aid off. You can't just pull it off a little bit. You got to pull it off. Now, Sonny says, in my opinion, Powell will back off to 25 points next time. I don't think so. Now, remember, that's just my opinion. I think with this statement right here, Powell says the Fed will not hesitate to keep raising rates until inflation comes down. Sonny, I don't think he goes back to 25 points. I don't think that he goes back to 25 points. Asif says Fed only got one choice: save inflation. He what else can he do? And if he backs off, Sonny, what happens? He can't. And again, this is just my opinion, and this backs up my opinion. This came out today. Actually, that came out 2 days ago. This statement came out 2 days ago. And it looks like he ain't gonna back down. Personally, for them midterms, it kind of listen, Ninja. I'm not taking us down that path. You right? You know that, right? Now, along with that, with inflation, California gas average tops $6 per gallon as prices surge across the U.S. This also will stymie a big move off of the bottom. All right. This is another. I was listening to the radio. The gas station line 76 said that they're preparing their pumps to reflect double-digit gas prices. Double-digit gas prices. Glenn says, correct, Glenn. No 25-point moves, but greater in short term. He also said inflation was transitory. Do we have to go back to that? Glenn's been telling you since he started using that word, that they were using the wrong word, that inflation was not transitory all this time. All this, and for all of you who may be new, go back to any of my past videos. I've been calling them out on that, that the inflation was transitory. I've been calling them out on it since last year. All right. This is big, and I think this is bigger than what people think right now. Think about this. A lot of people in here, in my opinion, I think, for the most part, have the money to be able to absorb some of this, I think. All right. And right now I'm going on a presumption. But there's a lot of people that are not in the same spots financially that we are. And I'm hearing stories of people putting, you remember the days where when you were broke, you only put $10 worth of gas in your car, no matter what, that was it. That's all you had. But people are doing that on a bigger scale right now. Why? Because they're living week to week, all right, or paycheck to paycheck, and they're just putting in enough gas to carry them over to the next pay period. Why? Because they still need money to eat. I went to the store yesterday. My wife says, because I had a softball game. She said, I know you got to eat before you go, so how about you go to the store and pick up some turkey burgers and bacon? I said, okay. I picked up turkey burgers, and I went to go to get the bacon, a pound of bacon. And I usually don't shop in my house. It's my wife. I usually don't shop for food in the house. $9? $9. And this is at Food Kitty. $9 a pound of bacon? Holy smokes. And me, I love bacon. I still had to buy about 3-4 pounds of bacon. That's just me keeping it in the house. But that's a lot of money. Drew says, gas is so expensive, even the coronavirus won't travel. Wow. That is funny. So Mash Luxury says 200 likes and Joey will make inflation go away. Yeah, and Joey pasted that. Somebody pasted that. I like that. 200 likes and Joey will make inflation go away. So, all right. So these are things that I think that even if we do come off nicely on a bottom, there are things that will keep that bounce short-lived. But do I think we're close to it? Absolutely. The longevity of it, I've got no clue, but I'm looking at things like inflation. I'm looking at things like gas prices. I don't think that it's going to be long-lived, but it still could be a buying opportunity. So what kind of market are we in? We are in a trader's market. This is the kind of market that we're in. We're in a trader's market. James says, I wonder if OPEC will increase production to help with oil price. Well, I don't know. I think OPEC is looking at us, licking their chops, going like, we got you where we want you. That's what I think OPEC is doing, James. I think I think that OPEC is looking, saying, we got you where we want you. We got you by the, Joey, can I say short hairs? Can I say that? Oh, no. Well, I said it.
You already did.
Say again?
You already did.
Okay. Are you mad at me that I did?
No.
Okay, that's fine. All right, so they got us where they want us. And then, I'm going down another path here. We're going to go to Venezuela and say or Iran, or we're going to say, well, we want you to give us your oil. These bad places? Does that make sense to anybody out there? I'm just curious. We got oil. And I think, you know what? And this is where I think the positive catalyst comes in. What if we open up some of this land in Alaska to pump some of our own oil? You want to get gas prices down? You want to get gas prices down? Let's pump some of our own oil. It makes sense. And I don't understand why, from a political standpoint, folks, it's about wanting to help the American people, not to push an agenda on either side. Pump some freaking oil. We got it. We got it. Pump some. A little bit. A little bit. You don't want these gas prices, because once these gas prices get to $800, $8 a barrel, a gallon, who's going to drive anywhere? Think about who's going to drive anywhere. And Paul says, Glenn, he says, Glenn, you're getting political. Yeah, and I don't want to, but I think, I honestly think that there's no getting around it. There really is no getting around it, Paul. I think we need to pump oil. You don't think people are going to want to work the oil fields? Rick, you think there's going to be a problem to find the people to work the oil fields? And Dave, we already are pumping oil from Canada. We already pumping oil from Canada. And Terry, for the first time ever, I can actually say in here, it's a bit difficult to separate the political from the economic. You guys know I try very hard to keep the political out of any presentation that I do. I try very, very hard. But this whole oil thing, this whole gas thing, I think it can go beyond just being political. It just makes it's common sense. It makes sense. Gosh, we got the oil. Let's just pump some of it. I'm not saying we go exploit all of Alaska. Let's just get some of those. All right, let's just get some of that. With the global oil demand, increasing American oil production won't make much of a difference. Let's use another spur to transition renewable energies. Lauren, it may not make a global difference, but it will make a difference in the United States to keep these prices under control. All right, it will make a difference to keep these prices under control. All right, so that's as far as I'm going to go. I think it makes sense for us to drill some of the oil that we got. We got it. Why not use it? All right. So those are things that are going on behind the scenes. Actually, not behind the scenes, but those are some of the things that are going on to keep us down. To keep us down. And it's tough. But the market, with all of this keeping us down, the market is so oversold. Rick on Facebook says, not only China depends on oil and gas, but Europe is going too. You know something? We pump enough gas where we can help our prices, and then we can also help the EU a little bit, can't we? Can't we? Bull markets gain 114% in the last 2.7 years, again, per Hartford Funds researchers. Bull markets. We've been in a bull market since when? 2016? Yeah? We've been in a bull market since 2016. Have we had some bear pullbacks? Absolutely. But we've been in a bull market since 2000. That's a long time. That's a long time. Do we need a bear pullback? Are we in that bear pullback? And David is putting out a whole bunch of stuff by Hartford Funds. State stocks lose an average of 36%. The average bear market lasts 289 days, just under 10 months. The oil companies are reticent to increase production and increase spending because they don't want to repeat a previous time when they did that and the market then fell out. And, the oil companies or the oil stocks or energy stocks have been in the doldrums for the last couple of years before now, right? They've been in the doldrums. So do you think this situation with crazy gas prices will give a boost to the EV market? Yeah, that's another political conversation that I can have. I swear, I wish that we could do a stream where I could be drinking beer on the live stream and we just kick back and talk. All right, I wish we could. Or Joey and I could go on some kind of a tour to talk to you guys offline about some of this stuff. This would be great. That would be great. But I'm a big fan of the EV market. Do I think that that all of this is sort of being manipulated to drive people to EVs? To a certain degree, yes. But then I also think that to a certain degree, it's a natural order of things. I think it's a combination of the both things. All right. This is what we do. Let's go to my next story. How many of you know what's going on with retail stocks? They got smoked like a pound of bacon. They got smoked. And well, before I get to that, let me go talk about the market again a little bit. Let me go to my watch list. For the stocks that I use for tracking the market. We're at the VVC and the SPY. Let's go take a look at it. And let's start talking a little bit of why I'm feeling about a market bottom. Let's bring this up to a 3-month graph. Here's our indicators. The buy to sell ratio, is that up here? Where's my buy to sell ratio? And do I not have it up there? No, capital appreciation. Oh, I can't do it from here. I'll do it in a moment. Going to a 3-month graph, market could go lower. Here's the bounce that happened last week. Thursday, Friday. Here's Monday, Tuesday, Wednesday, and today. Nice open candle today on good volume. We're still below the 20-day exponential moving average. And I think that we have an opportunity to go a little higher. We just need some news. But I'm still thinking that everybody, big money out there, is thinking that the market is oversold, that they're still going to start to try to buy stocks at low prices. You remember back in 2013 where the market went up for 1 year straight with no good news? I'm wondering if that could happen again. I still think that there's a lot of other things behind the scenes, like the gas, like the interest, like the inflation, that's going to keep the market down. But I think that, stocks can only go but so low or not. They can keep going down lower and lower. But this is the epitome of volatility. Up, up, down, up, big down, up. That's 1, 2, 3, 4, 5, 6 days. A lot of volatility shown here in 6 days. All right, so Terry says, are we looking at Friday after market cocktail chit chat hour with Glenn? That might be cool. Hey, Joe, are you down for that? Cocktail chit chat hour?
Yeah, let's go.
I'm down for that. All right. The sound is great but soft. Oh, okay. I don't know what's going on. I'm assuming the volume is fine. All right. Let me see what my Facebook people are saying. Monica, I know personally about retail because I got caught in that, shaking my head. Thankfully, I only had a small position in SJM. I would love to sit down and have a beer with you, Glenn. I would love to do that. I would. All right, so we're going to talk about retail in a second. Raphael says we could be sitting on a higher low right now. We could be. Here's a low. We are at a high. Well, not really. This was, yeah. Well, that's the low. I don't think we're at a higher low just quite yet. We needed to be higher than that low. But I do like the trend coming off of a level of support. I like the volume to back up the move. I don't like MACD. I'm not a MACD kind of guy. I don't know why it's on my list. But the market is at a point where it's looking. Here's the S&P, same kind of scenario. Down, up, down, up, down, down. If it gets below that low of yesterday, this bar will turn green. So even on the red bars, they're open. Those are what I call bullish, bearish bars. But we're still below that 20-day exponential moving average. All right, we're still below that 20-day exponential moving average. What did Bill say? Bill G says, oh, and so Miss McClintock is saying the same thing. All right. Retail rumor is a push for big discounts to push volume out. We will see if there's relief for the consumer in the need of that special report. I'm going to talk a little bit more about retail when I get into that story. But I wanted to show you where the market is setting up right now in regards to, I think a bottoming is intact. I'm showing you the things that are affecting the markets being able to bottom and what the data is showing me from a market bottoming. All right. So now it needs to move higher above the red. It needs to move higher above this No, you're right. It needs to move above that candle in order to turn green. It needs no. That's the closing of the candle. It needs to rise higher than the close of the candle in order for it to be green. All right. It needs to rise higher than the close of this candle to move to be green, like it did here. See that? The price closed higher than the close. The price closed higher than the close, it turned green. If we can get and close above on the spiders, if we can close above 391.86, and we're not far from it. If we can close above 391.86, the S&P bar will turn green. The S&P bar will turn green. Thank you, Jay. And Jay had to leave. See you, Jay. All right, so that'll be interesting to see if that bar can turn green like we did on the S&P, on the VectorVest composite. Now, let's go back to the story. Let's talk about retail earnings. Retail earnings. Who's buying retail? We are. When we look at what's going on from an inflation standpoint, we are the ones that move retail, whether we're buying or not. All right? Whether we're buying or not. The more we are buying, the more these companies are making money. The less we're buying, the more these companies are losing money. And a lot of the companies, some of the retail companies beat earnings, but missed on revenues. Why? Because people are pulling back on their buying. Why? Because they got to spend more money on gas. They got to spend more money on bacon. They got to, and rents are going up. I had somebody in the Jockey Club this morning. Evidently, he owns properties, saying that he's having a hard time with people paying rents. How many of you own properties? How many of you rent out properties? Just type a 1 in the room. How many of you rent out properties? I don't know how many people just in the market are into real estate and all that kind of stuff. But I've increased my property rent 30%. Wow, Glenn. That's really, and they're paying it? Wow, a lot of people, more people than I thought are in rental properties. Wow. And I'm gonna have to go with Glenn. Are you guys in the same boat where you're raising rent? Yes or no? All right, Glenn, how is the big SUV doing now? It's sitting in the driveway. All right, it's sitting in the driveway. Yes, over the last 2 years, says Glenn. Good time for REITs. I think that might not be a bad time for REITs. But the problem is, if you are a property owner and you got rents, with inflation, man, that's a tough call. That's, in my opinion, that's a tough call to raise rents. Because one of two things is going to happen. They're going to be slow to pay, or they're going to leave. And if they leave, they're going to go into the same situation where rents are high again, right? My rental tool truck, $158 to fill up. Wow. I have REITs watch list. You know something? I'm going to look at those. I didn't think about that for this week. I think I have a REITs watch list for Trending Thursday. If I do, we'll take a look at it. Terry says, coming to the end of the earnings season, a monthly option expiration tomorrow. Could it be that we won't have a sense of where the market is going and whether we're at a bottom until next week? Now, remember, when I said that we're looking at a market bottom, I got no time frame on it. I'm just telling you the market is setting up for one. I have no time frame on how long it's going to be, but I think it could be a really good explosive one. Now, we did a good job last week in our Jockey Club with Steve putting up a bottom fishing portfolio. But the market being so volatile, we still captured gains, but they were a lot lower than we anticipated. Could that happen again if we go to another bottom? Yes. So as I talk about us looking for a market bottom, I need you guys to understand that if you see a bottoming opportunity, be quick to take profits or at least take half off the table. Does everybody in the room understand that? Yes or no? Both on Facebook and YouTube. Do you understand what I just said? Yes, the market is getting ready to present a good bottom fishing scenario. But if we don't have a good positive catalyst to push the market higher, I need you to understand that you need to take those profits quick. Now, Scott says no. All right, so Scott, with everything that's going on in the market, as I'm telling you about the gas, about the inflation, all those things are holding us down from the market exploding big time to the upside. So with the market just by the means of being so oversold, and our indicators are telling us that we're looking for a market bottom, I'm thinking that the bull run coming off of that market bottom will not be huge. It will not be huge. Monica says those who raised rent probably had rent low for too long. That may not be a bad understanding as well. Fabo says, I want a perfect pair to swing trade for about 2 weeks or for about weeks. We got ETF pairs. There's ETF pairs. That's what you were looking for. We do have ETF pairs. You said, you mean when the market bounce, we take profits? I think you take profits pretty quick because, yes, I do think the market's going to go down again. I don't think that we've got any big thing to push the market and keep it higher. All right, so we're talking about some retail sales. Let me go to my watch list. Retail. I got Lowe's, Home Depot, Target, and Walmart. Before I show you those, I'm going to go up. Here's the earnings calendar starting from yesterday. Lowe's, missed revenue, beat on earnings. TJ Maxx, missed revenues, beat on earnings. That means they beat the earnings, but it ain't a whole lot of people buying the stuff. They didn't hit their revenues. What else was up here? There was something else that was up here from, maybe it was the day before where we had Walmart. Walmart was a couple of days ago. Target, there it is. There's Target. They beat on revenues, but they missed on earnings. But they drew the market down big time yesterday. They drew them at the open. They were down like over 20%. They were a drag on the market yesterday. So this was a week of retail stocks, and they disappointed and they pulled the market down. But again, Lowe's missing on revenues. People are not buying as much as they thought. TJ Maxx, same thing. But Target did beat revenues, but they missed earnings by a lot. Their earnings forecast was $3.06. They only made $2.19. That's why it was a big draw on the market to the downside. All right. So now let's go look at the stocks. Lowe's, Home Depot, Target, Walmart. And things I do like about Lowe's and Home Depot, they got good upside potential. Earnings play, they got hit. All right. It was an earnings play, they got hit. Target outperforms the market or overall with relative value. Walmart, on the other hand, the biggest storefront, the biggest brick and mortar retail, their relative values is not above 1. Notice that 3 out of the 4 have sell recommendations. The only one that's got a hold recommendations is Home Depot. All right, let's go over to the earnings side of it. They missed earnings or revenues, but they all have got positive earnings per share, and they all have positive earnings growth. So the misses, I think, were in line with what was going on in the current market's conditions. These are still altogether good companies. There's no ifs, ands, or buts about it. And the thing is that people still need stuff. But I think that they will pull back on buying luxury stuff so that they have general stuff that they need. They need stuff. All right. So I think they're going to still buy from these stores, except for maybe not, not as much as Lowe's and Home Depot. I don't know how many people are, putting more into their homes or, projects and stuff like that. Let's go look at these graphs. Let's go look at them. Look. Let's go put on a nice move on Lowe's today. Look at that nice move. This is an intraday 5-minute graph. Let's go to a 3-month graph. There's where the hit after earnings. We throw earnings up. There. But look at the rebound day today. How about I got a bullish engulfing on lows? Could that be a good play? I'd like to see more volume on it, but I still think fundamentally the stock is sound. All right, I still think fundamentally the stock is sound. Earnings didn't hit, but look at the move. I'd like to see if it can break above that 20-day exponential moving average. Same thing with Home Depot. That one looks like a bullish harami, another bullish reversal pattern. All right, I'd like to see it break above the 20-day exponential moving average after earnings. What's the next one? Target got smoked, and it's still getting smoked. Now, it's got good upside potential. I think that it's just a big name, and everybody just hated that it did what it did. It should be able to recover, but it's not. All right, big drop down after earnings and still another big down day today. I'm thinking, let me see. Kramer chastised Target and Walmart for not pre-announcing earnings miss. Is this a Kramer play? And you said the same thing about Walmart and Walmart. Wow. So is this Kramer running his mouth and then everybody else is going, yeah, Kramer knows what he's talking about. Okay. Is that what you're trying to tell me, Paul? Because the other two are rebounding. Walmart and Target are not. Interesting. Should I average down now to get ready for bounce? Ooh, Patrick and I talked about dollar cost averaging yesterday. VectorVest is not a fan of dollar cost averaging. I'd rather have you have your money into a stock that's moving than to put good money behind a stock that's moving down. Saborium responded in the comments yesterday. I think he was kind of mad at us. I think that let's do this. How many of you believe in dollar cost averaging, type of 1? How many of you do not believe in dollar cost averaging, type of 2? That's gonna start off this conversation for me right now. Both on YouTube and Facebook. How many of you believe in dollar cost averaging, type of 1? How many of you do not believe in dollar cost averaging, type of 2? And I think that the people that think about that they like dollar cost averaging, the ones that are typing in a 1, I think that you're going to definitely be outweighed by the 2s. I think that whether it's on Facebook or YouTube, you're going to be outweighed by the 2s. Now, let me talk to you about why, and Patrick and I did this yesterday. Why do we not like dollar cost averaging? And I will take this. Maria puts up a good statement. Depends on the stock. And I also think that it depends on time frame too. I think it does depend on 2 things. In general, though, why do I not like dollar cost averaging? What is the name of the game? All right. Monica on Facebook says, not sure yet. I'd rather buy and hold than DCA. I do prefer trend following. So let me talk to you about why I don't like it. 1, if you like the stock, then you should buy the stock when the stock is doing what you want it to do, is go up. Okay. So let's say you like a stock long term. And you say, I think this stock is going to go up long term because I see the news. I've done my homework on it. All right. You buy the stock at $100, goes down to 90. Well, I liked it at $100. I'm going to go buy some more of it at 90 to help push my cost down. Okay. Then the stock goes down to 80. I really liked it at 100. I'm going to super like it at 80. The problem is, in any stock, no matter how good the stock is, and I'm a big fan of Apple, no matter how good the stock is, how low is low? Think about that. How low is low? All right. And from that perspective, how low are you willing to go as the stock's price is going down? And what if something happens and the stock never goes back up? What do you do? No, I'm holding. I'm all in. I'm going to hold it until it goes back up. And if it takes 6, 7, 8, 9, 10 years, are you okay with that? And if you type a yes, then that's on you. Are you okay with that? Or would you rather be in a stock and be able to time the stock to buy low and sell high? Get that profit, because what did you say, Scott? Name of the game is to make money. Yeah, I want to make money. but I want to be able to make money, take that money and make more money, and take that money and make more money, and take that money and make more money, as opposed to take that money and lose money, put more stock into that losing stock and lose more money, and put more money into that stock and lose even more money. What did you just say? The name of the game was to make money. And I want to put you guys in the best situation to make money, use that profit to go get another stock, make more money, put that into another stock and make more money. Which one makes more sense? And I can do that over and over in 5, 6, 7, 8, 9, 10 years. Otherwise, I'm dollar cost averaging. That money is stuck. I can do nothing with it because I'm all in. Who makes out on that? I'm asking the question, who makes out on that? Now, you dollar cost average down, the stock goes down to $50. Now, when the stock goes back up, do you know how much money you got to make in order to break even on that trade now? And let's say it goes up higher. How much time, how much agita did it cause you on that trade where I can continue to make money hand over fist over and over and over? Who makes out in those situations? All right, so, and you know something, Scott, you say you like to make more money. I'm looking at my portfolio. Even with all of the stuff that we're going through throughout the year, my portfolio is up 37%. I will never dollar cost average down. I use the program to help me to make the right decisions at the right time to get in and out of stocks. I don't got the time to be waiting and wasting on a stock. I'm not going to say wasting. I don't have the time to be waiting on a stock to start moving up and for me to dollar cost average down. That's not me. Now, I'm not taking that away from anybody out there. The question was, why do I not like dollar cost averaging down? I got 37% this year on a market that looks like crap. I'd rather time the trades and make money than to wait to make money. That's my opinion. Now, and I'm sure that there's going to be a lot of people out there who are going to be able to argue the case why they prefer dollar cost averaging. If that works for you, by all means do it. All right. Peter says, kicked out Apple will buy back, no dollar cost. And I've always been that way. I love Apple, but I'm not in love with Apple. And I think that the people, think about this. I think about the people who are all about dollar cost averaging down. You went from loving a stock to being in love with a stock. And that's one thing I'm never going to do. I'm never going to get so in love with a stock that I'm willing to ride it down. Does that make sense to everybody out there who's dollar cost averaging? All right. I'm just curious to know. Bruno says, well, Glenn, you need to teach us to do that. I teach you that every week on how to utilize the VectorVest software. I time my trades. I look at what's hot. A lot of the money that I've made this year have been on energy stocks. Why? Because they've been hot. Why buck the trend? Why try to go into a stock that I think is going to go up later rather than taking advantage of what's going up now? I don't understand that. But there are reasons. As I'm watching here, there's reasons. So Scott says, so my stocks are the negative. Should I sell them or get my money back then, taking a loss? I can't answer that question. I can't. All I can do is prepare you for future times so that hopefully you don't get into what you're in right now. That's the way I look at it. I can't tell you what to do right now. All right, Glenn, do you have any long-term in years positions? Not right now. Not right now. All right, and I'm not unless if I own them, I could play options on them. All right, right now, I don't have any long-term in years positions. Like all the money that I've made on my Apple trade, that's my big long-term position. But you know something, when the market tells me it's not the right time to be in it, I'm not. All right. If I really wanted to be in a trade longer term instead of dollar cost averaging down, I would buy a protective put or sell a call. That's what I would do. And that way I can still make money and absorb some of the loss as the stock's price is going down. Instead of, if I'm really in love with a stock and I don't want to ride it down and have to dollar cost average down. Play an option. Sell a call. And sell it over and over again. Over and over again. Buy a put. As long as the stock is going down, that put's making money. That makes better sense than dollar cost averaging down. That makes sense to me. And I'm looking at it this way. Can anybody tell me that that thinking is wrong? Anybody who's dollar cost averaging, can you tell me that that thinking is wrong? Would you rather to absorb some of the price decline by way of an option or ride it down and put more money behind that stock? And Wrangler, and the answer to your question is some of it, yes. The majority of the 37% returns is really taking advantage of what's going on in the market. And if you look at midday market, I always talk about what sectors are moving. I talk about that. I try to keep you on board with that. A lot of what I've made this year was on what's moving. That's it. And so for the people who are saying, wow, you got to teach me how to do that. I do it. Every Monday in midday market, I talk about what sectors are moving. In here, I talk about what's sort of kind of what's moving. I give you more different information. Okie James says, I use options that way. I would rather you, play an option rather than dollar cost averaging down. To me, that makes better sense. All right. Know nothing about options trading. Susie. Oh man. We've got a course coming up called Covered Call Boot Camp. You need to go think about it. All right, you need to go think about it. Would you say most of your gains this year were long or short? Long. And then when the opportunities presented themselves, did I make some money on contra ETFs? I sure did. I won't short, but I will play contra ETFs. The majority of the money I made was on energy stocks. The majority of it. Some of it was made on timing when the market was moving down to play contra ETFs, to play the right contras. Absolutely. All right. I've told the story way back when I first started here. I started in 2004. In the year 2005, VectorVest gave me $1,000 to put into the market. I turned that $1,000 into over $80,000 in 8 years. A lot of it was options. So for those of you who say, can you give me the name? Hi, can you give me the name, please? A Covered Call Bootcamp. Hey, Joey, can you put the link for Jim's Covered Call Bootcamp webcasts up in the room for YouTube, if you can find it? Take covered call course. Covered calls are so safe that
the last webcast is today at 4:30.
All right. Give them the link in the Joey's gonna put the link up there for you. There's a webcast, a free webcast today at 4:30, Susie. Go check it out. And David is already saying, go take it. It is awesome. It is an awesome course. Now, Monica on Facebook says, I don't know if it's worth buying a put in the children's margin account since it's like having 100 shares. No, you would only buy one put. Can you have a class on buying a put for stocks we want to hold? I'm not sure how to calculate how many puts to buy. You can only buy the amount of puts compared on how many lots of 100 stock you have. And for that, the children's margin account, since it only has 100 shares, you can only buy one put. The math on that is real easy. You can buy or sell one put based on how many 100 shares that you own. If you own 150 shares, you can only buy one put. All right. If you own 150 shares, you can only buy one put. Do you think bacon is overpriced? Heck yeah, it is. But something, I'm still buying it. I'm one of those people. As long as I can put gas in the car, I'm getting ready to go fill up the Excursion today. It's going to probably probably really be, and I'm only using regular, it's probably going to be about $150, $160 to fill it up. I'll fill it up. Then I have a Passat. That's a 60, and my Excursion is a 40-gallon tank. I got a Passat that's got 16 gallons, and I put premium in it. I'm going to fill that up too. I just need to, I always want to make sure that both vehicles are filled up, especially the truck. All right. I still think that instead of dollar cost averaging down, I'd rather play an option. All right. So those were my retail stocks. Man, I love the conversations we've been having lately. My next story is on nuclear energy. I went and just found some stories on nuclear energy, and people are seriously talking about it again, because of gas prices, people are looking for alternatives. And that's why I think EVs are on the rise right now, or at least interest in EVs are on the rise right now. And again, I think there's other factors that are pushing people towards EV, pushing people towards nuclear energy. Joey, didn't I do a story on uranium? I did a story on uranium and the use of them being used in nuclear reactors. I still think that it's a good space to look at specifically. Let's go take a look at some stocks in that space. I've got a watch list just for you. Where is it at? 00 clean energy uranium stocks. I got some stocks just for you, about 10 stocks or so. All right. Look at this today. All of them, with the exception of URG, are up today. You think that the interest ain't there? Just as I start thinking, all of them, all 9 out of the 10 stocks are up today. Let's look at the top 4 that are up. BHP, UUUU, UEC, UROY. And for the most part, these are still speculative plays. You want to talk about buying low and selling high. These could be opportunities to buy low and sell high, but time them. All right. I like the space, but time them. BHP, look at that today. Roger says, whatever happened to the natural gas powered fuel cell called the Cube? It was a big deal a few years ago. Google bought a bunch of them. Then it went. I don't even know about that, Roger. Something I need to look at. That's something I never heard of that. Don't buy an EV. Buy a garden hose and learn how to siphon. Wow, David. That's not good, David. All right. And look at BHP. Look at that. That's a nice move today. UUU, a little choppy all over the place. Well, actually, I don't want to look at it just today. Let's go put these on a 3-month graph. Remember, these are more so speculative plays. But look at that. BHP coming off a session of a low, breaking through 2 levels of resistance. All right. And just coming above the 20-day exponential moving average on good volume. What else? UUU coming off a level of a low. I would like to see it break above that level of the 20-day exponential moving average. Same thing with UEC and UROY. All right, but these are uranium, and uranium is going to play a big role in nuclear energy. Monica says, thank you so much for that simple put explanation. You got it, Monica. You got it. And so for anybody who still is wondering, when I sit back and say I've made what I've made in the market, a lot of what I show you between midday market on Monday and trending Thursday on Thursday, I try to give you as much as I possibly can to help you guys. All right, to help you. Better wear your body armor if you plan to siphon. Listen, I'm not doing that. That's not good stuff right there. Stop talking about siphoning gas. Joey, tell them to stop talking about siphoning gas. You might listen to Joey more than me. Joey, tell him. Joey's not telling you. Sigh. He might have walked away. It's all right. Don't siphon gas. All right, let's get to my next story. My next story, Tesla cut from the S&P 500 ESG. That's the environmental, social, corporate governance. That's big for them. You would think that with the clean energy or the electric cars, but he got pissed off and he's tweeting. We'll look at that stock. and contra ETFs. All right, let's talk about, what did I just do? That's not what I meant to do. Let's go look at Tesla. Where's it at? Let's get out of this. Let's get back into this. Let's go to Trending Thursday. Tesla's in here. I think everybody knows Tesla's a good company. Tesla's a good company. AutoFit. Where's Tesla? There it is. Tesla's it's always been way overvalued, but the company makes money. It's a sell recommendation right now. This is another one of those stocks where I wouldn't be saying I want a dollar cost average down. Do you really want to wait through all of this before? And then by the time it moves, you know how much it's got to move before you recoup some of that money? So I got hydrogen fueled engines. I'm still looking at hydrogen fueled engines. I'm still trying to get some homework on that before I start to put out a story on it. I'm just thinking about it. But there's some people that are on that. We'll see. I do like Tesla eventually. The relative value is at 1.7. The stock is fundamentally sound. It's fundamentally sound. I just like to see it go above that 20-day exponential moving average. In regards to ETFs, contra ETFs, I've been saying this for a minute that I think that the downside risk outweighs the upside potential. I think we're getting too much closer to a bottom in the market, bouncing off the bottom to sell stocks short. But I would think about contra ETFs. But just be careful with them. If you're going to look at any contra ETF, if on an end of day basis, if any of them close below that 20-day exponential moving average, I would take it off the table quick. But notice that I got a closed candle, even though it's higher than previous day. I got a closed candle. The price is lower than the open. 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 They're all because the market's rebounding today. That's the tough part about trading contras. You could say, yeah, I made all this money. But when a day like this happens, you don't be afraid to take half off the table. You don't know how much this is going to pull back. All right? You don't know how much they're going to pull back. Chris says, Glenn, I just saw your video on XROF and Rivian. With everything you put together, wondering if there was any insider buying going on that might shed some light on their intention. I don't know. I did tell you that in Rivian that the founder bought $1 million worth of share. All right. So in that video, it talked about it. And it did talk about it. My question from before, 1K to 80K, which search did you use in VectorVest most? That was the main question. Remember, in the time that I was running that portfolio, making money in that portfolio, 2007, 2008 happened. A lot of the money was made in contra ETFs. A lot of the money was made in contra ETFs. And then in 2009, when the market rebounded, jailbreak no contras made me a lot of money as well. A lot of money. That was one of the best bottom fishing opportunities ever. Was coming out of 2007, 2008, going into 2009, and we nailed that bottom. I made a lot of money right there as well. So contras in the 2007, 2008 timeframe, a lot of money was made there, and off the bottom was jailbreak no contras. The watch list again. Which watch list? My nuclear watch list. Where's that at? Clean energy uranium. That one right there. It wasn't. Yeah, it was. There's my clean energy uranium stocks. If you need to, I'll leave it up there for about 10 seconds. Take a picture, whatever you need, and then I'll go from there. Options on the SQQQ, ride the red wave down a little bit more. I wouldn't mind. Be careful with it. The SQQQ is playing it to the downside. Be careful with it. That's all I got to say. Be careful with it. Don't be afraid to take profits. And if you're going to buy options, unless you're going to do them short term, you got to be careful with it. All right, so I put that out there. Now, I told you if you stay to the end, I'm just going to give you some stocks that I like. I'm going to give you some stocks that I like right now. Go to Stock Viewer. I'm going to type in 5 stocks that I think would be a good, well-rounded portfolio right now. ECTM, GOGL, ARLP, SQM, SQQ. Yeah. Which ones came up? GOGL, ARLP is up there. ECTM is up there. SQM, SQQ. All right. Sigh. Where's the rest of them? I just put in the rest of them. 1, 2, 3. How come they don't want to show up? What did you do? Hit enter. Oh. These are, where am I missing something? ECTM, ARLP, SQM, GRLG. My last one was SQQQ. Put that up there. SQQQ. There we go. I did this on my Twitter page. I was asking to see what stocks were out there that you guys would make a portfolio with. And the thing is that this would be short term now. This is not long term. This is if I had to build a portfolio right now, what stocks would I be looking at? And this is them. All the ones that are not ETFs, how about all of these have good earnings growth? They have good earnings. Let's go over, do they pay dividends? Yes. Dividend safeties on 2 of them are above 50. Are they, and they're all in an uptrend right now. These are stocks. This is a pick, a basket of 5 stocks that I would, at least tell you to keep your eyes on. Look at this shipping company. Shipping industry is moving. ARLP, that's, let's move over. Let's go show where they all are. Petroleum, energy, transportation, chemical. Notice how nicely diverse this is as well. All right, I'm not putting all my money into one. They all are nicely diverse. Thanks for sharing. I've been in cash just waiting, says Monica. I got you on Facebook. I've got 5 stocks that I at least want you to keep your eyes on. That's all. All right, if I had to go and just put something together right here, right now, this is, and you know something? No, I can't do what I want to do. Or can I? No, I wanted to look at these as a group. I got to put them into a watch list to look at them as a group. But I think that these are not bad stocks to keep your eyes on. So that's my bonus today. Explain Zim dividends. Zim dividends look good, but the stock beat earnings and revenues and went down. I don't know why that was yesterday. I have no idea. I've had that question asked to me. I do not know what happened to Zim yesterday. I still think that it's a good stock. I think the shipping, that's where the GOGL comes in. Shipping is a good space to be in. I just don't know what happened to Zim yesterday. I have no clue. The stock, it's rebounding today. I don't know if yesterday was profit taking or not. It could have been profit taking because the stock had done some well. Put this on a 1-month graph. I'm not even calling it that. I don't know what happened to Zim yesterday. It beat earnings and it beat revenues and it got beat up. And I've got no clue as to why. Those are good stocks, Glenn, like your pick says, Drew. There you go. You want to see the graphs? Let's go take a look at the graphs of these. All right, let's take a look at all of the graphs then. Put them all on a 3-month graph. View the stock graph, 3 months. We'll do that. ECTM, bottom left, top right, pulled back today. I wouldn't buy it today. Right now, if I'm not in it, I'd like to see it break above that that level of resistance before I buy it. Love the volume coming into it most recently. Next one, Zim. That's not one that I put on the list. ARLP, bottom left, top right. Volume is all over the place, but I love that it's been staying consistently for the most part above that 20 exponential moving average. Look at that big bump up today. Look at that big bump up today. Wow. Here's the shipping company, bottom left, top right, a little bit of sideways move, but broke through, sitting, running on big volume today. I like that. Chemical fertilizers like Mosaic, things like that. Bottom left, top right, a little bit of a pullback. And this is what I mean about back into, when I first started the portfolio with $1,000, time to trade. When it closes below, that's all right to take your money and wait for the opportunity to come back in. You got a little whipsaw right here. That'll happen. Boom. Not only did it break above the 20-day exponential moving average, but broke to a level of resistance. Look at that run up. That's what I mean by timing the trade. And I don't care, if I took the profit off the table here, did I lock in profit before it ran down to here? Absolutely. Time the trade. SQQQ, as the market's been settling into more of a bearish mode, it's been moving up. I don't ever mind having a contra to hedge my portfolio. And I think that that's exactly what I've done here, is that I just put a contra in here to hedge the portfolio. And Ninja says Zim has a $25% tax on his dividend. I was in Zim just to get the dividend. I was owner of record. And then I was asking, did everybody get their dividend on it? And they were like, yeah, they got taxed on it. That's poopy. But I don't think that's what moved the stock's price down. I don't know what moved the stock's price down at all. I just don't know. All right. I finna go. Do I want this? Which one I want, Joey? I want Trending Thursday. Do I want this one? No, that's not what I want. I want this one? I want this one. All right. I don't know how many likes I got today. You know me. I like to be at 100 likes or more. Did we get there? I don't know. It doesn't show me. Joey, what did you do with it? Oh, it's over here. I got 72 likes today. All right. It is what it is. If you like the content that we went through today, just hit the like button. If not, that's so fine. Who sent me? Harry Reynolds sent me the song to the Carol Burnett, and I still didn't write it down. Why the 20-day moving average versus the 3-8 crossover? Randy, because I was looking at these stocks a little bit longer term, more of a swing trade than a trade. Remember, I'm trying to look at some of these longer term. So I use a 20-day exponential moving average for that reason. All right. So I gotta go. Did we get to 100? We got 100 that quick? Did we really? Holy smokes. Y'all are awesome. That was quick. We got 44 comments on. I tried to answer as many as I could on Facebook. I know Monica chatted a lot. Alex mostly chats a lot on Facebook, but Monica chatted in a lot. So I tried to answer as many of those questions. This was an awesome conversation. I learned a lot and got some great perspective. Thank you, Monica, and I hope you come back again. Everybody, if this was your first time, or anybody, if this was your first time, don't forget to hit the subscribe button. Hit the bell icon so you'll be alerted when new videos like this come out. And I love all the comments today. So we had a lot of comments. I gotta go. All right. Adios, arrivederci, ciao, au revoir, sayonara, aloha. To all my peeps in Hawaii, bom dia, salam, shalom, namaste, yasu. Till next time, folks. See ya.